Good evening, ladies and gentlemen. Welcome to the 2023 Talk to the SARB Forum in Soweto. My name is Mahlase, and I have the pleasure of being your program director this evening. Thank you very, very much for joining us. As the South African Reserve Bank, we're quite excited to have all of you in the room. It has been quite a while since we've been in Soweto. Our last Talk to the SARB Forum was in 2019. Unfortunately, we've had to do it all via Zoom and Teams as we were managing the pandemic. But as the South African Reserve Bank, this is really a special one for us. We are really excited to be able to spend the evening with all of you here so that we can engage with you directly, and we are definitely looking forward to some of the questions, comments that you will have this evening. Before we get things underway, I have a few house rules. In the unlikely event of an emergency, if you look to my right here, we do have an exit point, and also to my left there, we also do have an exit point. Should there be any emergency, and it is unlikely, we will then direct you to calmly use those exit points. Those of you who are here and perhaps you want to WhatsApp a friend, a neighbor, family members to actually be able to watch this live, because we are live on our Facebook, South African Reserve Bank Facebook channel, and also on our YouTube link. You can quickly WhatsApp your neighbor, and the link is Facebook.com/SA Reserve Bank. And if you want to follow us on YouTube, that link is YouTube.com/@SA Reserve Bank. I do understand amongst us, we also have students from the University of Johannesburg. Can I see you? Give yourself a round of applause. I'm hoping that you are the ones that are going to be on Twitter. So if you are there, our handle is @SA Reserve Bank, and our hashtag for the evening is Talk to the SARB. It's been quite exciting seeing a number of you taking pictures and posting those on. Those are all of our social media platforms, and we are looking forward to engaging with you there. And do follow us, because we don't only post about the developments of the bank, but we also post about internship opportunities. We also post about bursaries and many other things. As we get on, I just want to acknowledge a few of our dignitaries that are joining us tonight. We have with us the Executive Mayor of the City of Johannesburg, Mr. Councillor Kabelo Gwamanda. Can we give him a round of applause? And if he could just raise his hand and for the people to see him. Thank you very, very much, Mayor, for joining us tonight. We also have the chairperson of the Finance Committee, Tsilidzi Mlinyai. I hope I'm pronouncing that right. If he could also just wave from where he is. Thank you very, very much. We have Councillor Loyiso Masuku, who is the MMC for Corporate Services. Thank you very much. We also have the City Manager of the City of Johannesburg, Mr. Floyd Brink. Thank you. We also have the Chairperson of NASASA, which are the Stokvel Association. I saw a number of members here. Thank you very much for continuing to support us. And then, last but not least, we have the Reverend Xolani Glwati, who is the former Dean of the Anglican DOC in Johannesburg. Reverend Xolani Glwati, thank you very, very much. But all of you are our honored guests, and we are really honored that you chose to spend a few hours of a chilly Johannesburg winter evening with us here at the South African Reserve Bank. For those of you who are attending Talk to the SARB for the very first time, we do this every single year. We actually go around the country, but I can tell you a secret. My governor's here and my deputies won't say it, but Soweto is their favorite. So give yourselves a round of applause. I'm going to take this moment to just introduce to you our panel very quickly. These are the people that you will be posing the very difficult or maybe easy questions to them about the work of the South African Reserve Bank and the decisions that they make. To the far left, we've got Governor Lesetja Kganyago. Can we please give him a round of applause? Next to him, we have Deputy Governor Rashad Kasim. He's responsible for financial markets, international economic relations, and policy within the bank. And next to DG Kasim, we have DG Fundi Chasibana. She's also the CEO of the regulatory body or subsidiary, the Prudential Authority. And essentially, they are responsible for making sure that banks and insurance companies manage our money safely and sound so that when we actually need it, we can actually find it. So that is DG Fundi Chasibana. Thank you very much. And next to her is DG Kuben Naidu. Part of his responsibilities are the national payment system. Not everybody knows that every time you swipe your cards there, the Reserve Bank is somewhere in the background making sure that whole system works. But he's also responsible for upgraded banknotes. Has anybody seen the upgraded banknotes? Do you have them? Do you love them? Oh, thank you very much. If you have any questions, you can also post those. Before I introduce our final lady here, the four gentlemen and a lady here are part of what we call the South African Reserve Bank's Monetary Policy Committee. So they are the people that sit every second month. And then, you know, when the governor stands on a Thursday at around 3 p.m. to make that announcement, and all of us are sitting nervously wondering which way are they going to go, they are the members of the MPC. The fifth member of the MPC is Chris Luwald. He could not be here with us tonight, but he is the head of our economic research policy. You know, after they've made the decision, then the commercial bank sends you that SMS, right? And sometimes you're smiling, sometimes you're not, right? But they are the people. But the last member of our panel is Pamela Mjandana. In the bank, they call her the Sangoma. But her official title is the lead economist in the South African Reserve Bank. And I'm sure a bit later on you will get to know why they call her the chief Sangoma in the bank. So ladies and gentlemen, this is our panel for the evening. They are here because they are accountable to you, the Soweto residents, the people who actually make this country work. And in a few minutes, we are going to be inviting you to put forward your questions to the governors and the deputy and Ms. Mjandana as well. With those few words, I'd like to hand over to Governor Lesetja Kganyago for some opening remarks. Governor, over to you.
Thank you very much, Matlati. Unlike you, I wouldn't want to stand there. I'm trying to level the playing field and be at the same level as you. What Matlati didn't say is that the Soweto Talk to the SARB forum is the only forum where you have the entire MPC coming to an event. Whereas with the other events, we send one or two people to the event. So Soweto is a very important space that we thought that we would like to interact with. It's been 3 years since we were last year in Soweto, and every time we had been here, the interactions have been very fruitful. But many of you, tonight, after seeing the display outside, got to understand that one of the main functions of the Reserve Bank is that we actually issue the notes and the coins that you carry in your wallets, in your purses, in your pockets, and that, importantly, these notes and the coins could basically just be seen just as a piece of paper or a piece of metal. But the reason why they have value is because the South African Reserve Bank stands behind those notes and coins. And it is thus important for us that we protect the value of those notes and coins. And the way in which we protect the value of those notes and coins is to ensure that they buy roughly the same basket of goods that you buy from year to year or from day to day or from month to month. The value of that basket of goods and services that you consume can be eroded by the rise in the prices of those goods. And that is what inflation does. And so you might be asleep, but even when you are sleeping, inflation continues to eat. And every day that you wake up, you might find that prices have changed and all of that. And so the leadership, the people of this country, thus decided to task the responsibility of protecting the value of this currency to the South African Reserve Bank. And this is done because the protection of the value of the currency is a necessary condition for balanced and sustainable growth. It might not be a sufficient condition, but it is definitely a necessary condition for balanced and sustainable growth. The Constitution provides that we should also do such things as are ordinarily done by other central banks. But should we be tasked with that responsibility? Such responsibility must be captured in an act of parliament and must be consistent with our primary mandate of price stability. The Financial Sector Regulations Act thus tasks the South African Reserve Bank with the responsibility of ensuring financial stability. How do we ensure that there is financial stability? Firstly, we ensure that the financial system continues to function, that it does the job that it is supposed to do, which is to channel resources from savers to the borrowers, and that the borrowers are able to service their debt back with the savers, and that needs a functioning financial system. Secondly, we ensure financial stability by making sure that the institutions that participate in the financial system are safe and they are sound. That when you place your deposit with a bank, you know that at a point when you would like to make your withdrawal, you will be able to get your deposit. That when you have taken a policy with an insurer, that when a claim is due, that insurer is able to meet that obligation. And for that to happen, we put a responsibility on the institutions we regulate that they have sufficient capital, meaning that they have got the resources to be able to meet your obligation, but also that they have got, we put liquidity requirements on them, that it is not just that you should be able to access your money, you should be able to access your money as and when you need it. And that is the responsibility of the South African Reserve Bank in terms of ensuring that the institutions are safe and sound. And this year, we took a step further under the leadership of the National Treasury. We are now implementing the cooperation for deposit insurance. Put simply now, what this means is that if you have a deposit in a bank, up to 100,000, should the bank not be able to pay that deposit, the Corporation for Deposit Insurance will compensate you up to a value of 100,000. And this is a further plank in our architecture of ensuring that there is financial stability. Earlier on, Mahlatsi talked about the national payment system, which is the lifeblood of the financial system. Because whether you are buying shares on the Johannesburg Stock Exchange, or whether you are withdrawing money at an ATM, or whether you are swiping your card at a point of sale device, or whether you are sending money through your mobile phone or through the internet platform, or you are generating some e-wallet, behind all of these activities, what makes sure that these things actually happen is the national payment system, and that national payment system is run by the South African Reserve Bank. So we make sure that that national payment system is always there, it's functioning, and to mitigate against the risks of any disaster, we make sure that this system runs concurrently at different locations, so that if should any one of them collapse for whatever reason, an unforeseen reason, the system continues to run because it has got a hot backup site that is actually functioning. So it's a very important function that people do not get to see, but it is the responsibility of the Reserve Bank to ensure that payments actually take place in the system. To arrive at our decisions, we compile statistics which we share with the South African public, but we also analyze the statistics and data that comes from Statistics South Africa and from other data providers in the country to inform the decision-making process in the South African Reserve Bank. So based on this data and this analysis, I would like to move on and give you a quick update of where the South African economy is. And since the last time we were here in Soweto was 2019, I'd like to state that it's been 3 years since the onset of the COVID-19 pandemic, which disrupted our lives and thus contributed to economic volatility and hardship globally. And South Africa was no exception. And our economy did slip into a recession as a result of the COVID-19 shock. The South African Reserve did deploy its tools to cushion the South African economy against those shocks. The results were there to see, because by 2021, the economy rebounded by 4.7%, and in 2022 by 1.9%. And we can say that the economy is now back to where it was before the COVID-19 pandemic. Still, the employment situation remains challenging. Unemployment, unfortunately, is higher than what it was prior to the COVID-19 shock, prior to the 2020 shock from COVID. But the response of governments to COVID was in the form of lockdowns. Today we can meet here without having to worry about putting masks, and today we can shake hands. We do not have to elbow each other. We can sit next to each other now. We do not have to keep an empty chair in between to try and keep social distance. But as the economies reopened, the measures that governments put, that central banks put in place, meant that economic activity is resuming in earnest, but the provision of the goods and services couldn't meet that resurgence in economic activity. Result was that globally you saw a resurgence of inflation. And so inflation began to rise. Prices rose, everything from fuel prices to food prices to prices of fertilizer and so forth. Those prices rose, and as they rose, they began to erode the income of working people at the time when people were just beginning to resume economic activity, reporting for work, and these things. And this has become a global phenomenon, and it's also happening in South Africa's major trading partners. Inflation did rise in South Africa, but it peaked at 7.8% in July last year. There are countries that experienced inflation as high as 12, 13%. I do not want to mention the big outliers where we were talking about inflation of 100% and all of those, which eroded the incomes of people there. But the rise in inflation was not purely a global phenomenon. You had these shocks, these global shocks that led to a rise in inflation. South Africa has its own idiosyncrasies, things that are peculiar to South Africa that led inflation to also rise. And amongst these factors was the impact of load shedding, which the Reserve Bank estimates that would have added about 0.5% to the overall inflation during the course of this year. We had to identify channels through which it impacts on the price formation. And for many producers of food and some of the retailers, they had found that due to unavailability of reliable power, they ended up having to discard some of their products. And without the discarding of some of those products, somebody had to pay for it, and they ended up putting prices up to try and compensate for those losses. And so this impact was also beginning to come through. But we also found that load shedding impacted on economic activity. We expect that the South African economy will only grow by 0.4% this year. If it was not for load shedding, this economy would have grown 2% faster just like so roughly 2.3 or 2.4% if it was not for load shedding. But South Africans are also a resilient lot, because what we have begun to see is that what is now actually driving investment is a response by South African businesses, by South African households to bring alternative power to bear. So today when you go around, you will find that there are lots of installations of solar panels and all of that stuff, and that had begun to spur investments. But these are also coming at a cost that are also feeding through into inflation. But coming into Soweto, Soweto is a vibrant area, but economic activity in Soweto is also dominated by the informal sector. And trying to look around and seeing the size of the informal sector and measuring the size of the informal sector turned out to be a little bit of a tricky exercise. But I do employ a lot of clever people. And so if they are not sure of the size of something, they say it's between these ranges. But I'm not sure that it helps me a lot, because it says that the size of the informal sector is estimated to be between 6% and 30%. So with a range like that, you can't miss. It is somewhere in between. And so that is the estimate of the size of the informal sector in the South African economy. But what STAS SA does confirm is that the informal sector actually employs 3.1 million people. That is equivalent to 1 out of every 5 South Africans being employed in the informal sector. So in a way, the informal sector must be nurtured so that it grows and it can be formalized and grow beyond the informality. In Soweto, there are an estimated 1.3 million residents. What is not said is that this area has got a buying power estimated at some 5 billion rands. And it is no small change at all, but small to medium-sized enterprises are the lifeblood of the Soweto economy, and they actually employ around 500,000 people in the small to medium-sized enterprises. And so small to medium-sized enterprises have got to also be nurtured such that they grow. But Soweto has also been home to some of the best-known South African entrepreneurs who, even in an environment where the apartheid government tried to stop them from succeeding, managed to establish vibrant businesses in very hostile environment. And one of the things I liked doing coming into Soweto, and which I couldn't do today, is to try and stop in Vilakazi Street and have a meal before I come here. But just talking to people, I also hear that there is now the return of the Kota Festival to promote local tourism, and these are initiatives that are coming from Sowetans. Isn't that a government-driven thing? It's an initiative of the Sowetans, and you need more of these bottom-up initiatives that would bring our economies into vibrancy. And we hope that as the Gauteng government takes a drive towards the development of economies in the townships, that the economy of Soweto would also benefit from this. But at Soweto, with this population, also has a significant proportion of people who, if we divide the incomes that working people earn and we divide them into 10 categories, there is a big chunk of Sowetans who would fall in the lowest decile of the income earners. And I am having to tell you this story because I talked about inflation rising and how inflation in South Africa peaked at 7.8% last year, and that it is now, the most recent reading is 6.2%. So the trend is a correct one. And we would like to see that continue, and my team is expecting that inflation will decline to within the target range in either this second quarter or in the second quarter, or latest into the third quarter, that it will decline into target. But I am telling you the story of the lower deciles because you see, when you think that the poor should not, when we talk about the poor, we shouldn't be talking about inflation. Inflation ravages the poor more than the other income categories. That lower income bracket is experiencing inflation of some 9.6%, whereas overall inflation is 6.2%. If you take the top 10% of the earners, they are experiencing inflation of 5.9. And so if you're talking about the impact on the poor, think of the inability of the poor to protect themselves against the ravages of inflation. So when the authors of our constitution tasked this institution, that is the South African Reserve Bank, with the responsibility of protecting the value of the currency, meaning tackling inflation and ensuring that we have got stable prices, it was not because they were just thinking of the rich, or that they were understanding that inflation impacts the poor the hardest. And it is for that reason that this institution treats its responsibility for price stability with so much seriousness. Let me give you this other example. 3 years ago, with 100 rand, you could buy 3 bottles of 2 liters of cooking oil. Today, with 100 rand, you struggle to get one 2-liter bottle of cooking oil. The poor spend the bulk of their income on food. And so they feel the ravages of inflation even more. And it is thus important that, as economic policy actors, that we tackle inflation so that we can protect those incomes of the poor. Well, with inflation as such, it's important that we take action, and the South African Reserve Bank, in a similar manner that we had to act in 2020 when the economy experienced that shock and we had to adjust interest rates lower, we could do that because inflation remained contained. Inflation had declined. It went below 3%. So we could reduce interest rates to cushion the South Africans. Inflation went up, and the South African Reserve Bank had to adjust policy to try and arrest inflation, like all the other central banks in the world are doing. That, understandably, comes with pain. And you understand this thing, that we do not take pleasure. We do not take pleasure in South Africans losing houses or losing cars because interest rates had gone up. That is just a medicine. The interest rates are just a medicine that we administer to try and deal with the disease of inflation. By now you're getting the drill. When inflation is lower, interest rates are lower. And if inflation is higher, interest rates end up being higher. If we bring inflation lower, we will be able to enjoy lower interest rates. So, let me bring this to the conclusion and say that I'm looking forward to the engagements here tonight, not just about the issues that I had raised, but any other issue that you might have regarding the South African Reserve Bank and the work that you are doing, the concerns that you are having. And that is why this forum is styled Talk to the SARB. We are here to listen to you.
Thank you very, very much, Governor Lesetja Kganyago, for those opening remarks. We are now opening it up to you, the residents of Soweto, to pose any questions that you may have to the leadership here on stage. My colleagues are standing by, looking out for your hands so that they can give you the mic. We do request that you introduce yourself, and if you do represent an organization, please let us know. Or if you are one of the students from the University of Johannesburg, please let us know. We do plead, however, you keep your questions or comments as short as possible so that we can allow for everybody to have an opportunity to pose their questions or their comments to our panel. My colleagues are standing by. We are also, Governor, monitoring if there are any other questions that are coming through on our YouTube link or also on our Twitter channels, and we will be giving you those as they come through. Ladies and gentlemen, if you do have any questions, we do have one on the second row there. Thank you.
Firstly, I think we need to thank the Reserve Governor of South Africa, the only one who was able to come to Township to engage with the people and the people to hold the Reserve Bank accountable. And I must thank you for the declaration on the impact of hiking interest rate. And I think you come up front, you didn't even duck and dive on that situation. With respect to the biggest economy, the United States, and I think if it's not global recession, you tell me what it is, whether there's a banking crisis. There's the Silicon Valley Bank has collapsed, and the First Republic Bank has been bought by JP Morgan for nothing. If that is a global recession in character, South Africa cannot escape that, precisely because we're interdependent, we're interconnectedness in the context of the global economy and in the context of the globalization. So I want to raise just few questions. I won't be long, please. One of the questions that I want to raise are the following. One of the questions is that because I'm the chairperson of finance here in Gauteng legislature, Chilizimnyai. Some of the questions I'm raising them because these are some of the questions I'm experiencing from our constituents on a daily basis. And I know in the name of the Reserve Bank, independence, on several occasions, you are always, I think, against the position of South African government so far as the foreign policy with respect to Ukraine. I'm speaking Russian, Ukraine, that's what they call it, and Russian war. Conflict. South African national sovereignty is not about how market position themselves, but it's about the foreign policy position of South Africa of non-alignment. We're not allowed to choose. Even the market may want to influence as a risk from your point of view. As the government, we're not allowed to choose. We are non-aligned. We are active on the side of peace. But if, as the Reserve Bank, come out and say, hey, our position on Russia, it's a problem because of the market, I think we find that very difficult. And I think maybe you'll share with us, the Reserve Governor, about the continuous hiking of interest rate in the name of protecting the rand. As far as I'm concerned, one of the responsibility of the Reserve Bank within the Constitution of the Republic is to contribute towards the development of the country and employment creation. And I know the ANC took a position of nationalization of the Reserve Bank, which also meaning that the Reserve Bank must contribute to these twin tasks of development and employment creation. Lastly, what is your view on the de-dollarization of the financial market or the global world economy as proposed by the BRICS countries? I know South Africa is part of the BRICS. What will be your position in that regard? And I'm sure you'll help us. And lastly, I think I must be frankly honest that the Reserve Bank has been open about the issues of the franc and put forward the impact of the rising inflation. So to the community and to the poorest of the poor, that honesty to South African people, I think it's critical. I raise these issues not only for my own sake, but these are the issues from finance that we are confronted with. Thank you very much.
Thank you. There was a question this side.
Thank you very much. My name is Lungi. I'm from Black Pearls Investment Primary Cooperative. It's a cooperative for women, black women, that are investing in real estate. I just want to find out, in terms of the township economy, what role does the Reserve Bank play in terms of the education and also development? Because currently we have a situation where we're operating in different communities because we're trying to bring the lifestyle of the suburbs into our communities in terms of the residential and economic climate and the environment that the people are living in currently. Now, what we have experienced is that there is a huge gap in terms of knowledge. There is a knowledge gap between the people in the communities or business people in the communities and the Reserve Bank. We do not see any effort or any programs that the the Reserve Bank is bringing into the communities to educate the communities how they can contribute positively to the economy and how they can develop their own communities without relying solely on government. So there are some government agencies that are trying to come, but unfortunately, most of them are not really assisting because the programs that they currently run, they are motivated by the agenda of government. If there are programs in that specific department, then if, for example, you're in real estate, they will come and you start to raise issues around that sector. And if it's not in their agenda, unfortunately, you don't get any help, you don't get information. And the information that was shared today, I'm telling you now, 80% of the business people in the townships, they don't even understand what are you talking about. And what contribution or what are you doing as a Reserve Bank to ensure that you educate the communities in terms of all the things that you raised today? Because I feel like this is high-level information that is between a Reserve Bank and the institutions up there. What about the low to, medium to low income earners and the business people that are in the communities that are actually contributing in the economy? How do you assist them in educating them and contribute in developing their township economies? Thank you.
Governor, should we take one last one?
Yes.
My name is Dan Maharsha. I'm a local person here, originally from Limpopo.
Soweto.
My group of companies, is Manifest and Associates, as well as SMD Investment Holding Group and associate companies. I've been following, fortunately, myself and the governor. We've been in BMF. I happened to be one of the recruiter when he was the DG of the Treasury. That was way back. I've been following the Reserve Bank, reading quite a number of exciting things. Tiwa. Well done. I don't want to go back to the previous person. 2080, I was here. 2019, 2020, 2021, it was virtual. I've been following all the things. My question here, do we have government in this country? Almost 30 years. Poverty, 350 itself, job creation, people must go to school. The lavish lifestyle of the current government, corruptions, no salary delivery. You go to rural areas across the country, it's disaster. No water, no load shedding. Yes. The people who came with this state-owned enterprises, I don't know, do you know, Citizen John Roads, during the British colony, for those who doesn't know. When the apartheid regime took over, they maintained the status quo. When the blackie came in, messed it up. The manufacturing, if you go around the country, I move around big time. Hammanskraal, right? Dwerfontein, Mangope, if we remember Mangope say Mapantiti, Ribona spoke today, right? Job creation. During the apartheid, we used to get arrested for not working. There was Gokasihambe, Kwela, Lonani Yemuri Kone Mona. Today, instead of they must go to back to school, but grant. Back up your body, we told a 50 or 50 or whatever. Nyaupes. Then, if you know, you ask yourself, Agua, Russia, somebody mentioned about Russia, which is, as far as I'm calling it, oligarchy states. One person, rich at the expense of poor, his own people. How can you, at this time, go, invade your neighbor, rather than talking? Right. BRICS versus World Bank, IMF, IFS, LFC, export-import. What's that? Where are we? Economy, where are we? My last proposal, Mr. Governor, I'm glad the mayors in his committee that are here with the poor service delivery, rent a mayor, particularly in Joburg, 5 times. No service delivery. It's a shame. Did you work some of people? You never work in your life. My question, my proposal to the governor, I'm going to propose that, that these people understand the presentation you presented to us. That you are the key when we talk about the economy. It's yourself, SARS, Treasury, economic development, public works, job creation, maintenance. We are working hand in hand with municipality. Not tender. Tenders tens of corruptions.
Thank you. Can
Thank
I
you.
ask that we wrap up, sir?
Then, all I'm saying is, both Barat, 50-50, 1 week, 2 weeks, give them exercise. We cannot eat liberation. Liberation movement, they're all failures. No success story, rather than corruptions. Thank you.
Thank you. Governor, I will hand over to you to answer some of the questions. Just as a request, when you do answer, please stand up. The colleagues that are operating the cameras want to be able to see you and for all of the audience to also see you. And again, we do humbly request that we keep the questions as short as possible so that we can allow for as many as possible. Governor, over to you and your panel.
Thank you very much. Fundi, I would like you to deal with the U.S. banking crisis and risks of deflation. And then I think you do know something about de-dollarization. Or you want me to deal with that one?
I can too. That's fine.
Yes. So if you could deal with that. Kuben, if you can deal with the issue of the nationalization of the SARB and the continuous hiking and our contribution to development. If you could deal with that would be very useful. Who wants to volunteer? The thing about education, maybe let me deal with the one of education. Once they have all answered, Rashad, you are going to have to answer all the questions. The issue of education is a very important one. And it talks to the heart of the formulation of economic policy. And the problem I have always had with South African economic discourse is that it went something like this. Please don't confuse us with your facts. Please don't confuse us with your facts. This is what we want, and in spite of one saying, sorry, this can't be done because of the following things, it goes, don't confuse us with your facts. But also, the formulation of development policy, the choices of what we develop are matters of choice. And choice, I'm glad there are political leaders in here. Choice is made by the political leadership because there are difficult trade-offs, which is why we elect certain people to make those trade-offs. And it's very important to understand that and understand the delineation. But I also hear you talking about educating the business people and this so that you understand where these things are coming from. It's a much harder responsibility. And we try in our way to come in a forum like this, we do hold other stakeholder engagements with various business groupings, with labor, to try and get people to understand what we do. But we are just one cog in the whole machinery, and we can only do this much. And most of the time, and because I will be dealing with the question of from the member of the provincial legislature here, most of the time when we try to educate about other things, we get into trouble because people say, no, you must only talk about your thing. And maybe they are right, and they're probably right. Because then, that means we can only educate you about monetary policy, financial stability, payment systems, because that is what we have been given responsibility for. But I do hear you that we actually need a better informed public. I mean, there are other broadcasters here, I don't want to talk, but I was with a broadcaster outside and was talking about, the broadcaster was talking about the voiceless that are on that radio station. And he said that you have got to talk to these people, and people were. That is another medium that could be used, educating through that. But we also have got to be asking different questions, difficult questions, about the content of our curricula. That when we are coming out of the schools and we do not know the role of the institutions that are captured in our constitution and impact on our daily life in a big way, there is a disjuncture here. But it is very important that we continue that education. Honorable member of the provincial legislature, you talked about the South African position on Ukraine and neutrality and market dynamics. And what is the position of the SARB? The SARB does not determine foreign policy. Foreign policy is the responsibility of the Department of International Relations and Cooperation. But at the same time, I am cognizant of the fact that when we released our financial stability review, lots of people who didn't read that national stability review, the financial stability review, who relied on second-hand information through headlines of newspapers, mistook what the Reserve Bank was saying. And I feel duty-bound to clarify this tonight. The Financial Sector Regulation Act tasks the South African Reserve Bank with the responsibility of financial stability. As part of that responsibility, the South African Reserve Bank is supposed to analyze, identify events that could undermine financial stability, and within its toolset, take certain steps to mitigate those risks. Or if it can't, and those steps can be taken by someone else, by law, we have got to bring that to the attention of that someone else so that they act to protect financial stability. And we use a tool in the Financial Stability Review that identifies the risks that could undermine financial stability, the likelihood of those risks taking place, and the time horizon within which they could take place. So, you will not change the weather by changing the weatherman. What the Financial Stability Review did was to give us a weather report. It said, this is the weather report, we are seeing the following risks to the financial system. And if these risks materialize, they could undermine financial stability. And there are consequences when financial stability is undermined. Ask the Europeans and the Americans how much money they had to put in 2008 when they faced financial instability. Hundreds of billions of dollars they had to put in. We do not have them here. And we should be able to identify these risks and make sure that we mitigate. What did the Financial Stability Review say? The Financial Stability Review identified a number of risks. It said, first, energy insecurity is a risk to financial instability. And it said that we are concerned that this lack of reliable energy, that although unlikely to happen, it is not inconceivable that it could happen that we have a problem with the grid. And if it happens, how will the South African Reserve Bank ensure that you continue to make your payments? That's all that we said. We didn't say the grid is going to collapse. We said in the unlikely event of it happening, if it happens, how will the South African Reserve Bank ensure that you continue to make payments? We identified that. We identified the second risk. We said that it seems to us, in the engagement with the people who make decisions about the flowing of money, who lend us money, they do not understand our policy of non-neutrality. We didn't say this. It's not our space to say whether neutrality is right or wrong and which side you must. It's not our job. All that we said is, to the extent that the policy is not understood, the people who lend South Africa money are already behaving as if we already are punished because we had undermined policy or we had been found wanting. And the president was swift because he decided to dispatch a team of envoys to engage with the partner countries so that our policy is clarified. It was not the Reserve Bank setting out its policy or encroaching into a policy. That's not our job. That's not our job. Our job is to say, to the extent that that is misunderstood and we end up with secondary sanctions, these are the consequences. We identified a third risk. We said that South Africa is grey listed. We are working hard to get South Africa out of the grey list. But should South Africa not come out of the grey list, here are the consequences. What are the consequences? You will lose access to dollar markets. You will lose access to, you might lose access to SWIFT. You might lose access to correspondent banking relationships, and that will make it difficult for South African companies to trade with the others. That's all we said. Nothing more, nothing less. Foreign policy is not our responsibility as the SARB. We have been given the task of financial stability. I am cognizant, because of our standing in society, that when we say things, people want to say, even the Reserve Bank is saying this. It is very important that when we are interpreted, we get interpreted on the facts that we put on the table, acting in accordance with our mandate. Fundi?
Thank you, Governor. So let me talk about the de-dollarization. Very important to keep in mind that South Africa is a small, open economy. So in many situations, we are not the biggest market that decides how things are traded, what is the main currency of trade. So if you've got gold that you're selling And in the gold exchange, the currency that is used in the gold exchange is the US dollar. That is how you take your payment. So BRICS countries have been having this conversation over a number of years, of course, because we have what is called a contingency reserve arrangement. And as part of that contingency reserve arrangement, we have to have an understanding of if one country is in trouble and needs to draw or borrow reserves from the other countries, in what currencies will we be paid? So that was the context within BRICS, so that we are clear on what was the context of that conversation. But I think it's important to understand that as a country, probably almost 80% of our trade is quoted in dollars. Now, if we want to decide tomorrow we're going to use an alternative currency, there are obviously consequences. So you can pick an alternative currency that is not the US dollar. But eventually, to make that final payment, you will convert first into your currency, but that currency has to be converted into US dollars. The IMF has done some work to look at what a basket of currency could look like globally. And the IMF itself has got a basket currency that they call special drawing rights. And I think it gives us an indication of globally what is the closest replacement to a US dollar that we get to. So that currency basket looks at the percentage of global trade that is taking place in those currencies. So there are 5 at the moment. In 2015, there used to be 4 before 2015. In 2015, a 5th currency was added, which was the Chinese yuan, or the RMB as it's known. Before that, we used to have the British pound, the Japanese yen, the euro, and the US dollar. So if you want to know the percentages there, the US dollar is still the largest. It's over 40% of trade. And that's the work that they do. Every 5 years, they measure what is the percentage of global trade in that currency. So the US dollar is still the biggest one, over 40% of trade. The euro is next in line. It's sitting at about 29% of global trade, so it's next in line. After the euro, the gap is so big to the next one. So the Chinese yuan, which is the RMB that they have in the basket, debuted at number 3 already because of the size of China and because of the volume of trade that China has been able to do. But that's still sitting at 12%. After that, the next in line is sitting at 7% both, which is the British pound sterling and then the Japanese yuan. So if you're talking about a replacement to the dollar, you can see if you look at the percentage of global trade, how much time that will take. But this is now the IMF doing work and aggregating across countries. But every country has its own basket of trade. It depends on how much you are trading in goods that are quoted in that way. But I think it's just important for us to keep in mind that we are a small, open economy that is reliant on global trade. We don't set prices, we don't set what are the currencies because of our small position that we take. So let me talk secondly about the questions that the chair raised on the collapse of the banks in the United States. What has the impact been for us? And is this a sign of recession? Can South Africa escape that? So I'll talk very briefly about South African banks. So we monitor on a daily basis, on a monthly basis, on a quarterly basis, what is happening to banks here at home on an institution by institution basis. But as part of this report that the governor was referring to, we then look at the health of the system as a whole. Because one of the things that the governor was highlighting earlier is we want to make sure that if there's something wrong with one bank, it's not going to spill over to the rest, so that we isolate that. So as we monitor the individual health of institutions, where we see problems, we take action. And our job is to protect the depositors first, of course. And you would have seen that there are some institutions that were placed into curatorship over the past year. But you haven't seen what happened in those banks having an impact on the other banks. So when we look at our system as a whole, our system is stable, and we think that our system remains broadly safe and sound. But we do make sure that we keep track of what is happening in other economies and how do they spill over to South Africa. We did see when there was that stress that we saw in US banks, that had an impact in financial markets and what was happening in banking shares, but that did not last for long. But that's something that we do quite regularly at the Reserve Bank. We're monitoring what is happening in other markets and what does it have an impact on us on. On the issue of recession, every 2 months when we have the MPC, we look at what is happening to global growth and what does it mean for us. So when we say that our economy is likely to grow at about 0.3%, that already includes some impact on what we see happening to our trading partners. What we see at the moment is that the risk of a recession in the US is lower than it was probably a year or so ago. But we continue to monitor. Every second month, we look at what is the data telling us. We look at what is the impact going to be on what is happening here at home, what is the impact going to be on trade as a whole. So I hope that assists you with your question. But so far, we see what has happened to the US banks having been contained to the US and not having had big implications for our banks here. But we continue to monitor the health of our banks. Thank you. Kubir?
Thank you, Fundi. Thank you, Governor. Can you hear me?
Yeah.
So I'm going to deal with the two questions. The first is on the nationalization of the Reserve Bank. The Reserve Bank does have private shareholders, but in the main, government owns the Reserve Bank. The fact that the Reserve Bank has got private shareholders in some ways is a historical legacy. The Reserve Bank started in 1921 and it had private shareholders there. Since 1994, government has taken repeated steps to weaken the power of shareholders in some ways, private shareholders. Two particular things stand out. One is that shareholders are allowed to own up to 10,000 shares per person. They can't hold more than that. The second is that the dividend that is paid to shareholders is capped at 10 cents. Right? Now, there are 2 million shares. If we pay each shareholder, each share 10-cent dividends, that's 200,000 rand. In an average year, the Reserve Bank makes a profit of about 2 billion rand. 200,000 rand over 2 billion is some 0.001% or something like that. 99.99% of the profit of the Reserve Bank accrues to government, either directly or indirectly. It either accrues directly to government in the form of a dividends, or it accrues indirectly in the form of government's balance sheet because the Reserve Bank has it in its reserves. So yes, we do have private shareholders, but their influence is limited. The influence of the private, there is no role that private shareholders play in policy, in interest rate setting, in the regulation of the financial sector, or in contracts. The private shareholders nominate 7 members of the board. Government appoints 8 members of the board. It's a governance board, and it plays a very important role to make sure that we behave ourselves, we don't steal money, that there's proper procurement processes, etc. But it plays no role on the policy side. It plays a very useful governance role. So if government were to decide on the nationalization of the Reserve Bank, I don't think it will have any significant effect, because government already gets 99.99% of the economic value of the SARB. Government already appoints the majority on the board. Government already gets the indirect benefits from that. So let me move over to this issue of continuous hiking of rates. The governor explained earlier about how inflation erodes the buying power of people. But inflation is a little bit like a wildfire. It spreads quite rapidly. And it spreads in the following way. You know, Governor Mboweni used to tell the story. You walk to the side of the street to buy tomatoes, and the price of tomatoes has gone up. So you buy the tomatoes, you feel poorer. Let's assume that you work in a furniture shop. You go to the furniture shop owner and you say, you know, the price of tomatoes has gone up. Can I have a salary increase, please? Because I'm poorer now. The furniture owner says, yeah, sure, here's a salary increase. The next day, the price of the desk goes up from 100 Rand to 105 Rand. The furniture shop has to put up the price of the desk to compensate for giving you a bigger salary increase. On day 3, Pamela comes to buy the desk. The desk used to cost 100, it now costs 105 Rand. So Pamela then works for Mr. Khanyago in his shop. Pamela then goes to Mr. Khanyago and said, the desk cost more, can I have more money? Inflation spreads. It spreads a little bit like a wildfire. And so central banks, our primary mandate is to curb inflation. And we do that in many ways by causing pain and hardship. We increase interest rates. If the inflation is persistent, if it is spreading rapidly, then you need lots of increases in interest rates. You need consistent increases in interest rates. If the level of inflation is low, or if the pass-through from the tomatoes to the desk is lower, in other words, let's assume scenario 2. I bought the tomatoes. The tomatoes cost me more money. I went to the furniture shop owner. I said, can I have an increase? The furniture shop owner said, no. I can't give you an increase because economic times are tough, so I can't put up the price of the desk. For me, I've got to buy less tomatoes or less lottery tickets or less taxi fares or something else. I take the pain. Interest rates work in the same way. We try to make it hard for people to pass on price increases. We must acknowledge that that does cause hardship. But the hardship is less than the hardship caused if your value of your buying power is eroded. So yes, there have been a lot of increases in interest rates. We have hiked interest rates 10 times since November 2021. We don't do this lightly. We recognize that it causes pain and hardship. But the of eroding your buying power is more damaging, and that's why we have done it. But we won't increase interest rates forever. We understand that there are limits. Inflation is coming down, and that is positive. It is close now to the top of our target range, but we want it to get closer to the midpoint of our target range. And once we are confident that it is approaching the midpoint of our target range, we are likely to stop hiking interest rates. We don't want to do this forever. It is not our intention to do this forever. But we have to do enough so that we can get inflation back towards the midpoint of the target range. Thanks, Chair.
Thank you. Is there any question we've left out? Can we take
No, we
more?
have done everything.
Thank you very much. If there are questions, I see one on the 4th row there and another one on this side and 2 more that side. Can I humbly request we try and keep them as short as possible, and if you could stand and introduce yourself. Thank you.
Good morning, everyone.
Good evening.
My name is Bitumelo Dilapisho from Protea Glen. I'm not representing any organization. I'm just an employee. Thank you, Mr. Leseja Khanyeho, to be here and your team. Mr. Signal Khanyeho, since this year you increase repo rates by 50 points based 2 times. And this thing of repo rate is raping our people. Young people, they are losing houses. They cannot get jobs. We do understand, I don't know the analyst, the economist, people what they're doing when they analyze, when you increase the basic points. And then, I don't know, Leseja Khanyeho, Governor, it is not possible that we can advise the government. If you see our government, we have too much ministers. We have too much deputies. And those deputies, they don't do anything for us. But our tax money are being spent there. Around COVID time, former minister, Tito Mbeweni, he proposed to give the employees of South Africa the half of the pension, so that at least those people, they can live. Because since, well, now this year you increase your repo rate twice. The other one, the other one is the banks. When all our banks, whatever you do, you withdraw, you deposit, you e-wallet, we charge each and everything. Maybe it's better that we can withdraw ourselves to bank, so that we can put our money under mattress.
Thank you very much. If we could move to the questions over there.
Thank you very much. My name is Mpotla Goody. Yes.
Please, can you
Governor.
stand up? We can't see you. Oh, he's right at the back. Okay.
Thank you very much. My name is Mpotla Goody. I am with Bloomberg News. So my question is to the governor on, with his term of office coming to an end next year, has the governor been in any talks with the president on extending his term? And is the governor looking forward to extending his term of office? Thank you very much.
Okay, Zianda over there.
Thank you. My name is Minentle. I am an economics educator in one of the schools here in Soweto. I have two questions. Firstly, I'm aware that there are other tools or other instruments that the South African Reserve Bank or the monetary policy under the SARB can use in trying to combat inflation. Tools like moral persuasion, open market transactions, cash reserves requirements for commercial banks. Are they being actually used, or the only tool that the Reserve Bank is focusing on is interest rates? And then secondly, my grade 11 learners asked that I ask the panel to step by step explain the added security features in the new banknotes. Yeah, thank you.
Thank you. Okay, go to the side.
Good evening, everyone. My name is Johanna Langa. I'm a newly registered small business owner. And I believe that as Sowetan, we do appreciate institutions that are basically solution-driven. So I'd like to know which practical measures is the SARB taking or planning to take to support small businesses in Soweto? How will we access these opportunities? Is this part of your social responsibility? And which channels of communication do we have as small business owners in Soweto to access these opportunities and just have a line of communication between us as small businesses and the SARB as an institution?
Thank you very much. Gav, we'll take one last question from the mayor, and then I'll hand over to you.
Thank you very much. Governor, we'd like to welcome you as the city of Johannesburg, firstly, and your team. Extend our gratitude, because I understand it has been 3 years since you had an opportunity to engage with the residents in the city of Johannesburg, and Sowetans in particular. I don't have a question to ask at this point, but usually I'm the last one to speak where I'm from. I needed to actually make way for one member of the mayoral committee, as well as the accounting officer, to represent technical issues that I'm sure some of the residents would like to understand. Because I know most of the residents' intention is to understand how the Reserve Bank has an input on technical issues that affect their daily lived experiences. High level as it may be, it then remains a responsibility of us as government to then take this information through to them in a manner that they could best understand. For argument's sake, I was sitting with the city manager discussing his key performance indicators. One of them, true story by the way, one of them is how we incorporate the support for SMMEs in his key performance indicators so that I can be able to hold him accountable, because he's the one that's responsible for the purse of the city of Johannesburg, and to ensure, in fact, that the residents are not only limited to Soweto, those that are of a very low income and that are affected the most by inflation, have equal access to opportunities, and how we level the playing field, and directly linking it to his day-to-day reporting as the city manager. So after maybe this round, we can allow for the team to have technical input so that we can be able to engage with our stakeholders. Thank you.
Okay, thank you very much. Mayor, Governor, over to you and the panel.
Okay. Rashad, your time has come. Other tools for managing inflation other than interest rates. Kuben, I think you like this question of the measures that the SARB takes to support small business owners in Soweto. I think this question, every time they ask it, they look at you. And Fundi, will you deal with the issue of bank charges? And I thought Kuben had explained the thing about the increases in the repo rate that the gentleman asked, but maybe with the skill of a regulator, you just wanted to add another angle. And then I guess the only person who can answer the question about the term of the governor is me.
Okay, thank you very much. So the role of monetary policy, or the role of the interest rate tool in bringing inflation down, is something that we as experts struggle with on a daily basis, because the economy is very complex. What we do with an interest rate tool is, in times of when inflation goes up, and often driven by demand-side inflation, by demand factors, we increase the interest rate. By increasing the interest rate, we do two things. The first thing is that we say, for those of you who have loans, and these are often what we call floating loans, so it moves with the interest rate. As interest rates go up, you become poorer because you have to pay more, for a bond and so on. In so doing, we dampen economic activity. And the reverse happens when we want to stimulate, as we did during COVID. We brought the interest rate down right to 350 basis points in order to stimulate the economy. And you can stimulate the economy when you don't have an inflation problem. But at the end of the day, it is a crude tool, but it is the best tool we have. So for a central bank, in order to manage inflation, we use interest rates, but we also have other important complementary instruments, or something that we could call. We use various forms of communication strategies to encourage you to understand that we as a central bank are very serious about wanting to keep inflation close to our target. Now, cash reserves, all these other tools, they're a set of tools that deal with something that's a bit different. one of the things we do as a central bank is we manage liquidity in the economy. We play a very important role with banks to ensure that, that daily cash needs are met. And the importance of cash reserves, reserve requirements are partly to ensure that banks don't go bankrupt, that we backstop, that we make sure that banks have insurance by keeping deposits with us. But the other important role is that we want to make sure that, see, the thing about the repo rate, it's a very obscure rate. It's very hard for people to understand because in introducing the repo rate, we want to influence the rate at which banks trade with each other. It's what we call the interbank rate. So that's a whole different ballgame. But I think for our purposes today, the important thing is that when we want to manage inflation, we want to bring inflation down, it is the rate, it is the monetary policy instrument, it's the repo rate that matters. This is the best instrument we have to manage inflation either way, to stimulate the economy or to bring inflation down. Thank you.
Thank you. So let me talk about, people losing houses. I think Kuben touched earlier on the empathy that we have and recognizing the fact that there are hardships. So I think that in the space in which banks operate, there are a number of regulators and a number of guidance some guidance that has been given to banks in terms of treating their customers fairly, in terms of assisting their customers that go through hardship. So the National Credit Regulator is one such regulator that has provided guidelines in terms of what it is that banks have to do when some of their customers get into some of the hardships. And then we also have the Financial Sector Conduct Authority, the Financial Sector Conduct Authority that is responsible for ensuring that customers get treated fairly by banks. And we think that it is important that banks maintain the relationship. As Kuben highlighted earlier, it's not anticipated that we will be in this high interest rate environment forever. We saw during the COVID environment also where banks helped their customers to restructure on the basis of what was happening with their financial position. And I think that that's very important to hold the banks accountable. So losing your house simply because interest rates are higher is not necessarily the first option. But there are steps and things that banks ought to be taking to be ensuring that at least they provide the customers with an opportunity to make repayment arrangements in line with what is now their new income position. I think Kuben highlighted a lot of the issues. I think that, when it comes to job losses and interest rates, I think, when we spoke earlier, we discussed what the impacts of inflation is on the economy in more generalized terms. But inflation can also erode growth, as Kuben spoke about this wildfire phenomenon. If everyone is increasing prices, actually having high levels of inflation in a country is negative for job creation, more than having higher interest rates is for job creation. Happy to talk about how those trade-offs work. Because when you are a business, in order for you to create job opportunities, you have to be able to contain the costs that you have. But if the costs that you have are rising and growing every day, basically you will find that these other costs end up being equal to the cost of employing someone over the long term. So it's important for us to look at and understand these trade-offs that are there. And I know earlier it was highlighted that, sometimes we talk about concepts that are maybe too aggregated, but there are some lived realities that businesses have to live through, both in terms of what is the impact of the high interest rates, but there's also another lived reality of what is the impact of these rising costs on your operational costs as a business and what you have to provide for. Now, turning to bank charges, I think we have recognized as the South African Reserve Bank that historically South Africa has had elevated bank charges. The Competition Commission has done work also in the past looking at bank charges. There are areas in which we are seeing banks start to make improvements. But I'll also hand over some of these issues to Kuben, because we as customers often see an aggregation of charges. So they are the charges of your bank. So for you, there is no difference if it's a charge that is at an ATM or a charge that is due to your bank charging you because you're coming to bank cash in the bank. But we are seeing banks that, as they have started to use more digital platforms, you will see more banks encouraging you to use less cash. You will see more banks encouraging you to do more things via the apps. So I'm not saying that the bank charges are as low as they can be, but I'm saying that there are steps and things that we are starting to see banks make an effort. And the competition between banks, we think, is something that has been helpful in forcing banks, because they compete with each other, to start to lower their bank charges, some of them in terms of the packages that are offered. And then we think that this is a step in the right direction. Now, on the side of payments, there has been a number of innovations, and Kuben can talk about some of the things that we've done in working with banks to encourage them to lower the cost of transferring funds across bank accounts. So I think that's another initiative that our payments team has been involved in. But transparency of banks to their customers is very important. Again, this is an issue that our sister entity, the FSCA, has been working on, which is indicating that your bank needs to tell you that in your account, or when you take out the loan, there is this much money that is for insurance. There is this much money that is this, sort of explaining the financial products in a lot more detail, because one of the things that are a contributor to some of these charges is if you have signed, and then there are all of these costs that are there, but some of them have not been clearly explained and articulated to you. So the issue of bank charges, I think, is still there. We're dealing with it. I know it's not as fast as you would like us to deal with it, but it is. We are moving along in terms of working with our sister regulators as well. The financial innovations are helping in terms of lowering the cost of bank charges, but it's still there and still a factor. Kuben?
Thank you, Fondi. Let me start off on the bank fees. So it is true that South Africa has got high bank fees by international standards. But the good news is that bank fees have come down, and they're coming down in real terms, partly because today we've got a more competitive banking sector than we had historically. We have new entrants on the market, but we also have new technologies, mobile money, cell phones, etc., that are competing. In March, the banking sector launched something called PayShop, which is an attempt to have low-value transactions that will be settled instantly. If you're selling tomatoes on the side of the street, you don't want to get the money 2 days later. You want the money immediately into your account. PayShop is an instant payment system for low-value transactions that your money will be reflected in your account immediately. Several banks have said transactions under 200 Rand will be entirely free. They will not charge their customers. Only the big 4 banks have launched PayShop, but the smaller banks will come on board in July and August, and they will add to the competition to ensure that we can get lower cost payments. It is our objective, it is government's objective and objective that we share as a regulator for low cost, almost free, instant payments across the economy, and that's an objective that we're working towards every day. On the SMME support, there's a direct answer and an indirect answer. And let me deal with the indirect answer firstly. It is true that historically, South African banks do not support SMMEs as much as in other countries. It is true that it is difficult to get finance, difficult to get services as a small business person. The only way to solve that in the medium to long term is by more competition in the banking sector. So today you do have more competition in the banking sector. But beyond banks, there are now non-banks that supply finance to SMMEs. There are now at least half a dozen quite big companies whose dedicated job is to provide finance to SMMEs. This didn't exist 5 years ago. Many of these are called fintechs. Many of these you can apply online. Right? Many of these will provide SMME finance. They would want access to certain data that you have, and based on that data, they will give you a risk rating. The picture is not perfect. Many businesses will still complain of their inability to access finance. But the picture is improving, and it's improving at a fairly rapid rate, and I think that that's positive. One of the jobs as a regulator of the financial sector is to ensure that the banking system works for people. It's not perfect. It is nowhere near perfect. But I think we've made significant progress in trying to enhance financial inclusion, make sure that the banking sector is able to provide services to the customers where it is intended. There's a direct question of what role does the Reserve Bank play in supporting SMMEs? I should point out that we have a very small budget. Our budget's about 8-9 billion rand. We had Mayor Gwamanda here. The Johannesburg city budget, I think, is 92 billion rand, if I'm not mistaken. The national budget of the country is about 2 trillion rand. The Gauteng budget, what, 180, 200 billion, thereabout? So our budget is quite small. We have made huge strides in the last 10 years in moving SMME procurement from historically disadvantaged individuals and companies. Today we are about 55, 56% of that procurement. It was close to nothing 10 years ago. Not nothing, but close to nothing 10 years ago. So there has been a significant increase in that. The SARB website and the SARB annual report has got more details on that, including some of those SMME opportunities. But I stress we're a small player in that regard. Thanks, Chair.
Thank you. In the interest of time, I will propose that the teacher who was here asking around the security features, we have a stand outside that our currency team is actually managing, and they will take you through those security features. We have the brand new, sorry, Governor, should I say, the banknotes with the new designs that you can see, touch, feel, and we will take you through those security features. And I think it will make it a lot easier for the teacher to be able to explain back to the teacher. Governor, I'm going to take one last round, literally 3 questions that have come through from social media. And the one is, please ask the governor about the future of cash or banknotes in relation to cryptocurrency. And then the second one, which I'm seeing is beginning to trend also on Twitter, is please ask the governor why it has taken more than a year to issue a report on the undeclared foreign currency in Phala. Why should citizens have faith in them to drive a proper monetary policy, yet their conduct in affirming monetary laws is questionable? I think those are the 2 questions that we will take, and then we will wrap up after that. Governor?
Okay, thank you very much. Let me take the question of cash, not Phala. There are two very developed economies in the world. At one level, there's Sweden, where cash is almost non-existent, On the other extreme, there is US, where the use of cash grows every day, and they still use checks. So I think that cash remains important in South Africa as it does in many parts of the world. But we all know that all of us personally are using less cash as we use credit cards, debit cards, our phones. Some of us use Apple Pay, and so on. So I think that what will happen is that in some countries, digital currency will increase, and that increase in digital currency relative to cash will depend on so many different factors. It will depend on, whether it becomes cheaper. You wouldn't want to use an app if for every transaction you have to pay a fee, but you will use an app if for every transaction the fees, Kuben talked about PaySharp, the fee is negligible. So as much as we are putting a lot of emphasis on cash, cash will remain the cornerstone of this economy and many other economies for many years. There are lots of attractions to a digital currency. It is instant. You don't have to carry large sums of money. You're able to use your apps very efficiently. You can trade in all sorts of ways. So I think that the reason there's a hype about digital currency is that the evolution and innovation of technology every day makes it possible. And you must remember that in many parts of our transactions, we are digital. But I think so I think that even the South African Reserve Bank is busy experimenting with whether digital currency will make sense. Some countries, the Bahamas and so on, are using a form of digital currency. A very complex topic, but let me keep it short. Thank you.
Chair, can I just add something important? A digital currency is different from a cryptocurrency. Right? We don't regard cryptocurrency as a currency. We consider it an asset. It's now a financial product. There is a regulatory framework on that for the exchanges. But it is not a currency in the sense that it's the same like the rand. You can keep your assets in cattle, you can keep your assets in painting, you can keep your assets in diamonds, you can trade in that. That's not the business of the Reserve Bank, but it's not a currency in that context. Right? There is a regulatory framework led by the Financial Sector Conduct Authority for crypto assets. Its main intent is to warn customers on the dangers. Yes, you can use it. Yes, there are exchanges. Yes, there's KYC rules. Yes, there are exchange control rules, but the main objective is to warn customers of the dangers. Thanks.
Okay, thank you. Pala, we generally do not comment on investigations that are ongoing or that have taken place in the past. You might have noticed the Public Protector released her report on Friday, and they took long. Even when we complete our investigation, it will be a pronouncement on one thing. Were the exchange control regulations breached, yes or no? And that will be our pronouncement. In terms of our legislation, that is, we do not release a report because I think that you might have seen what SARB had done, because they are constrained also in terms of their legislation. But if the subject which is being investigated say you can publicly say this thing, we would do it. Otherwise, we would have to wait for a court to say release that. It is a subject of interest, this investigation, and we want to make sure we are thorough about it, and that is all that I can say. The term of the governor, the governor is not appointed for life. The governor gets appointed for a fixed term in terms of the legislation. Our legislation provides that you can serve a term of 5 years, and that term can be renewed. There is no limitation as to whether it can be renewed for the third time or the fourth time or what. As a matter of fact, Tito Mboweni did 3 terms. It's just that the third term was only 3 months. But because he decided to quit, he did do 3 terms. I have been in the South African public service since 1994 in different roles. Started as a junior in the central bank, went to the treasury, rose through the ranks of the treasury for 15 and a half years in the treasury. I came back to the central bank in 2011. I've basically now been in the central bank 12 years. There is nothing that drives me than the knowledge that I continue to serve my people. That is what I have done to the best of my ability. I knew nothing in a post-apartheid South Africa other than serving our people. I have been appointed for a term of 5 years, which finished in 2019. The term was extended for another period of 5 years. Before that term was expanded, I was asked whether I will renew my contract. I am going to give you exactly the same answer that I gave in 2019, and the answer is, I have been appointed for a 5-year period, and I understand that that 5-year period will come to an end. And when it comes to an end, the appointing authority must be given the space to follow the processes in terms of the SARB Act, which prescribe that. The appointing authority, being the president, must make a consultation with the board of the South African Reserve Bank, with the Minister of Finance, apply his mind, and make a decision. That process must be left to run its course. You asked the question whether I had discussed these things with the president. Discussions between the president and the governor remain confidential.
I think on that note, that's a perfect note to leave it. To my panelists, thank you very, very much for making this quite an engaging talk to the SARB, the Soweto edition. We really are looking forward to having you again next year. And to you, thank you very, very much for continuing to come to these. And please let us know if there's more people we can invite to come to these Talk to the SARB forum, because it is an opportunity, as we said, for our leadership to be held accountable by you. Before I wrap up, I've got one more thing to announce. So the first 5 people who have downloaded the SARB currency app, which is where you can find out all of the information about our banknotes and our coins, will get a giftingana from the South African Reserve Bank. So once you've downloaded it, you can go to our stand outside, and our colleagues will be standing there. Once you show it to them, they will give you something to remember this 2023 Talk to the SARB forum. Thank you very much. You've been a brilliant audience. The conversation doesn't end here. Our governors and our deputy governors will be with us, and you can continue to ask them questions as we enjoy refreshments outside. Good evening, and thank you very much.